Good morning, everyone. Welcome to our live market outlook session for Tuesday, 27th of September 2011. The main news actually today are the comments and the recent rumors that are spreading about possible interest rate cut by European Central Bank in their October meeting, as well as increase of the European Financial Stability Facility program called EFSF, and actually these were the main things that were the top news during the Asian session. An increase to the European Financial Stability Facility is likely, but might not be as large as some have speculated. Some of the top European Central Bank officials said yesterday. They said that they're just discussing an extension, but it's something more, most likely it's something more than it's currently, and the current amount is 440 billion euros. There were some rumors that it might come to 1 or even 2 trillion euros. However, earlier in Berlin, the German's finance minister Schäuble said actually he expressed his doubts on any plan to top up the EFSF program. Also, regarding the possible decrease of the central bank of the interest rates by European Central Bank, officials said yesterday that they were keeping their options for a rate cut open and lifting markets, even as one of the officials from the ECB board's official from Luxembourg, Yves Mersch, warned speculation of sharp move next month as wild. So from one side they are speculating about this, but from the other side it's actually using the usual terminology for a certain occasions when they are not giving the clear idea whether it's going to be done or not, and especially when it's going to be done. This is basically the usual procedure of the ECB officials. However, they said that it's to refer to to keep the inflation below 2%, as this is the projected level. However, the current Eurozone inflation is around 2.5%, and that was the last one in August. But it's expected to drop off over the policy horizon the bank uses to guide the rate decision. So most likely action will be, however, the most likely action would be the rate cut. Some are already operating with the 0.5% cut, as this will completely erase this year's action that, according to a number of analysts, is too sudden and too fast, not actually following up the current crisis, and now it has to be, in a way, corrected. Also the officials, the Luxembourg ECB member Mersch said also in about rate cuts that it's considered if the economic situation worsens considerably, and actually more than expected. Another significant point is that tradition of the cutting or increasing rates is that usually it happens during their meetings in the headquarters in Frankfurt, while this time is going to be away, the October's meeting in Berlin. So some analysts are speculating that there will be no action, as the tradition says that bank always reacts when changing rates, having their meeting in Frankfurt. However, we are going to see what is going to be the final outcome. Most likely there will be a rate cut at October's meeting. From the other side, Greece is now struggling to approve they are lawmakers to approve the very unpopular property tax. Voting is going to be today to open the way for the return of inspectors from Greece's bailout lenders and the release of vital aid for actually to keep the Greece economy afloat and prevent from default. However, as I mentioned, the very unpopular measurements are actually causing the growing anger among the Greeks, that they are hit badly by these austerity plans. As public transport, they will be in strike. Actually, they are in strike in past couple of days, and even tax collectors will begin 48-hour stoppage in protest against the bill and other new austerity measures. So the vote is the first test of the government's capacity actually to win backing for a new wave of belt tightening measures announced last week to convince the International Monetary Fund and European Union that Greece is worthy of an 8 billion euro loan that Athens needs to actually to avoid bankruptcy next month. So tough, very hard time ahead again for Greeks. Today we'll have results of this voting. The markets were trading the following way. The euro was quite steady during the overnight session yesterday afternoon. However, the 135.65 zone, its initial resistance and strong barrier actually at this point is limiting the upside. The similar thing is with the British pound, where the British pound against the US dollar, where the Fibonacci level at around just close to 156 zone is currently capping the upside, and basically break of this one is required to resume recovery or to signal an end. Dollar yen remains quite in quite narrow directionless trading range, while dollar Swiss is still floating above initial and strong support at 90. However, the outlook is not very promising, and the possible further dip is would be the likely scenario. Gold and the crude oil are currently in recovery mode after suffering heavy losses yesterday. More of this will be covered in our technical part. Just highlights from today's events. The German consumer climate released early this morning shows some improvements in the economical outlook in Germany. The release was 5.2 versus the 5.1 forecast, and also 5.2 the previous release. From Eurozone at 8 o'clock GMT, money supply yearly came at 2.8. Much better than 2.0 the forecast and 2.1 previous release, while private loans also were increased slightly to 2.6% versus 2.5% forecast and 2.4% previous release. Still to come the CBI realized sales from UK. Forecast for today -14 versus -14 previous release. And from US home price index, Case-Shiller, -4.4 is the today's consensus, versus -4.5 the previous one. Also, the US consumer confidence is expected slightly to come higher from the previous month of 44.5. The today's forecast is 46.2. So these were the technical, these were the fundamental points of today's market outlook. Let's now move to the technical part and see what were the recent movements. Starting with euro, we can see on hourly chart that euro maintains steady 2 days recovery from 133.61 fresh 8-month low posted yesterday. However, 135.65, pardon, the main and initial resistance is still capping the upside. The recent rejection at 135.68, so there was just a tick above the barrier, resulted in the immediate pullback lower, and the current currently attacking our immediate dynamic support, 20 days moving average at 135.05. Also the psychological figure level at 135.00 that has been already dented, market dip to 134.84. Inability to break 135.65 would put a rather renewed pressure on the pair, and likely refocus downside levels with the 134.78 is our initial support, so it has been nearly reached. The next come 134.25, 134.14 ahead of 134 as a figure support, and key support on the near term at 133.61, below which opens way for a deeper reversal. We have yesterday mentioned 132.43 January, so 17th of January low, and 130.44, which is 61.8% retracement of the broader 118.75, 149.38 ascent. So the near-term outlook maintains still, I would say, slightly positive tone. However, holding above 134.78 is required to keep focus on the upside, and the break above 135.65 is at this point a must in order to resume this near-term recovery. Longer-term outlook for euro-dollar remains firmly bearish, and basically initial resistance comes at 138, 139.35, while the key barrier comes at 140.50, which is the key level at this point required to be cleared in order to change the bearish longer-term outlook on euro-dollar. So 200 days moving average currently at 140.43, and 140 level is actually the key barrier at this point. Cable also lost the traction after hitting the Fibonacci level at 150, around 155.85. There was a brief break higher, however, a failure to sustain break resulted in testing of 155.97, just ahead of figure resistance at 156, and immediate pullback now is heading towards 155 level, which is actually the initial support. 155.31 has been so far tested, and then we have 155 as the figure support. As I mentioned, 61.8 Fibonacci of 157.46 down to 153.26 at this point is required to resume this recovery from last Thursday low at 153.26. However, failure here would trigger a deeper correction. With 155 is now the key support in the near term, and a break below here would definitely weaken the tone and signal the resumption of the broader downtrend, as the pair remains a short to medium term downtrend from 166.17, the high of 14th of August, and loss of some significant supports with the latest at 153.43 is actually opening way for a further weakness of the pair. Dollar yen is still in the directionless trading, moving within a narrow range. However, the outlook is, I would say, more negative, as 77 as initial barrier remains firmly intact, and several attempts higher resulted in the failure. The latest one was at 76.87 and 76.75. So the pair actually moves within some 20-25 points range, with the, as I mentioned, the immediate tone slightly turned to the downside, as long as 77 level continues to limit the upside. On the downside, 76.10 recent lows, 76.00 and the record low at 75.93 are the main supports, and the break lower would be very bearish and actually will open the fresh bare face after